Before anything else, preparation is the key to success. Alexander Graham Bell. And my friends, your preparation is 10 to 15 minutes every day, filling out your daily market worksheets, your weekly market worksheets. When you do a trade, your trade worksheet. And remember, trades don't cost you anything when you are practice trading. When you get really good at practice trading, that's when you move on to fractional shares. We have a great training on fractional shares. I'm going to put that at the end of today's video for you. The training video today is use all the charts all the time. That's how you keep from being surprised. What is that all about? Well, that's what that training's about. How do you get that training? Sign up for free at chartingwealth.com. Become a daily subscriber. It doesn't cost you anything. You get the videos and the training, daily market worksheet, trade worksheets, weekly market worksheets. Those PDFs are in the show notes every single day. Doesn't cost you anything. If you want to support us, of course, our book, Charting Your Way to Wealth. Treat yourself to an early Christmas present. Order the book. I'll send you an autographed copy. I've got one waiting for you. If you want a bound version of the daily market, weekly market, and trade worksheets, we have a 3-month bound copy. You get a discount if you buy 4 of those, a year's worth. But you can just start with 1 or just print them out yourself to get used to it. Once you feel comfortable with it, then of course you can look at getting a bound version or not. I don't really care. I just did that in case you guys wanted it, wanted to be able to keep things together. Now, let's jump into these charts. What do we have going on? Well, S&P down just a little bit, 0.03%, 0.3% down, so just about flat for the day. The Qs up a little bit, 0.4%. The Nasdaq 100 is what the Qs, of course, represent. What do we see on 20-year bonds? Up 0.89%. Gold down. Now, let's look at where we are overall, starting with the biggest chart first. So far, we have a green up candle. It's higher than the prior candle, reaching a higher high on the wick. That's decent, but we can see the price percent oscillator still moving up, but losing some of that prior week's momentum. Why? It's not as big a candle. It's not a whole lot higher than it was the prior week. Derivative oscillator still oscillating higher. That's fine. Go to the 2-day chart. That's where you really see where we're losing some of that momentum. Now again, Wednesday was the last full 2-day candle. This latest candle shows us breaking the 2-day trend line and moving down. It's the first solid red candle we've seen in quite a while, going all the way back to the 23rd of November. Still above the weekly trend line, but heading down. Still positive on the price percent oscillator, but we can see it moving down. Derivative oscillator has been losing momentum since it peaked all the way back on the 19th of November. So we'll watch and see where things are going, but we do see inherent weaknesses there. And of course, down in the morning, a little bit of a recovery in the afternoon on our Heikin Ashi candlestick. Of course, we had penetrated the 2-day trend line yesterday afternoon. Down again in the morning, recovered a little bit. That price percent oscillator still heading down. Derivative oscillator gaining downward momentum. So if you're in that S&P trade still, if you jumped in, do be careful and continue to pay close attention what's happening with that 2-day chart. Things start rocketing down. If you've not already taken your profit in your practice trade, might be something you seriously consider. Now, let's move on to the Nasdaq 100. My friends, we keep hoping to have a weekly vertical crossover. We have a green up candle, not as big as the prior week, but a higher high. But look at, if you look on the left-hand side of the screen under the first horizontal line, PPO, it's in blue. Below that, EAV. It's the exponential moving average 8 period. Those are the lines that you see there, both the blue and red, and it shows you where they are. They're the same number. So we don't have a crossover. It's just holding there. Of course, we like crossovers to be strong one way or the other. This one is not so far. We'll see what happens on Friday. If you have a weekly vertical crossover going up, of course, gives you the opportunity to jump into an up move. If not, then of course you just watch, wait, and see what's going on. But what if we have a strong down move and we have a 2-day crossover going down? That could cause a bounce off on the weekly on Friday. And of course, if it closes crossing over, it's going to have to be a lot of down movement to do that. But if you see the 2-day at the end of the day on Friday around 350, crossing over strongly going down, that would be a 2-day recross going down with a bounce off. That would mean, of course, at the price percent oscillator, you'd check that and see if the price percent oscillator number was lower than the exponential moving average 8 period, and then it would confirm a bounce off for a potential down move. Now, those of you who aren't familiar with what we do, you might be saying, what is that guy talking about? Why would anybody get into the Nasdaq 100 when it's moving down? Well, my friends, there are things known as inverse funds, such as PSQ. Those of you served in the military like me, Papa Quebec, let's see, PSQ, Papa Sierra Quebec. We look at that, and that is an inverse. It is the ProShares short. That's an inverse fund of the Q. It is set up and managed to move in the exact opposite percentage, not the same price, but opposite percentage as QQQ. Now there are ultra shorts that might be 2 or 3 times, but again, this one is a single short, and I'm just making a note here to put also the inverse funds, how to make money when markets crash training. We want you to practice trade these things too, learn all there is to learn about them. That's what you would do if you're going to short the market. If you hear somebody say, I'm going to short the Qs, one way you can do it is, of course, through puts. Another way you can do it, those are options. Another way you can do it is through an inverse fund. Both of them have their benefits and their drawbacks. And of course, for those who are Patreon supporters at any of our 3 levels, you get immediately upon joining, you get our 3-part series, Options Made Simple, the Charting Wealth Way. So if you're interested in options, in addition to learning how inverse funds work, take the training at the end of today's video on inverse funds, and also consider supporting us at the Patreon level to get, I think it's the best training. And it is, again, just a benefit for our Patreon supporters. So that's what we're looking for. We look at the half-day chart down in the morning, a bit of recovery in the afternoon. So again, keep in mind, just pay attention to what's going on with that 2-day chart, and the weekly at the end of the day on Friday might make for some interesting practice trading. Let's go to 20-year bonds. They're up for the day. The biggest up that we have for the day, 0.89%. Overall, though, the week is a red down candle, but that price percent oscillator's a little less than flat, still maybe heading down a little bit. We see the derivative oscillator losing downward momentum. We haven't reached a lower low, so things have really sort of been stalling. Let's go from the weekly, look at the 2-day. That's where you see where that stall has taken place after it bottomed out on the 2-day chart back on Monday the 7th, and then started moving up, trying to cross over. So again, if it crosses over going up, that of course would take us out of any potential down move. Now, if things reverted over and bounced off and really started moving down strongly at the end of the day on Friday, again, that's a 2-day recross going down, could give you an opportunity to jump in. So pay attention. What do we see on the half day? Of course, it crossed over going up back, and this is one reason that we don't use the short charts, because they are much more likely to flex or flux back and forth. We had a crossover going up on the half-day chart at the end of the day on Tuesday, and of course, immediately down strong Wednesday morning, and then trying to recover again. So we'll, again, revert to and pay close attention to what's going on that 2-day chart tomorrow as that 2-day chart closes, that 2-day candle closes. What do we see on gold? Well, gold down for the day just a little bit, 0.19% this week. gold really started off trying to push up strong and then just sort of petered out. We see that we have a very small green up candle, wick on the bottom, long wick that's deteriorated. The candle itself's deteriorated, leaving a wick from up movement prior in the week. Price percent oscillator nonetheless still heading down. Derivative oscillator about flat. Go to the 2-day. And you can see where there's just not been enough energy to cross over. So again, could you have a bounce off going down? That's possible. But again, we like to have things typically, I didn't mention this on TLT, but we like things to cross through before they bounce off going down to give us a better feel for actually a bounce off occurring instead of just sort of a pullback and a hold. So we'll continue to watch, see what there is to see there. But so far, the latest 2-day candle, first day into it, is slowing down from those 6 days of prior up movement. We have a red spinning top indecision tending down. Half-day chart, we can see that we had down movement for a full day on Wednesday, and then sort of slowing down in that down movement on Thursday morning, and then gaining a little more in the afternoon. Haven't had a crossover going down yet. Derivative oscillator did switch over in the afternoon to negative. That's where we are, folks. Interesting things going on in these markets. Thanks so much for being with us. Hope you enjoy the special training today. This in your show notes, along with, at the end of this video, fractional shares and inverse funds. Buy our book, support us. Patreon members, thanks for all you do to make what we do possible. God bless. All the best from the whole team at Charting Wealth, World Headquarters.